All right, traders, welcome to today's recap. This is Christian Fromhertz, Tribeca Trade Group, and it is January 4th, 2023. I think this is my first public video of the year. We did a nice webinar last night with one of my colleagues who invented the Market Webs indicator. So that was really nice. We went over some bigger trends. We did that last year as well, and really kind of uncovered some bigger trends. So that was really nice. If you want a recording of that webinar, you can get all of this if you become a member of Tribeca Trade Group. We are running a 50% off the first month if you're a new member. We're running that for a little bit to start the new year. So it's a great way to kind of see what we do on a day-to-day basis. And I think I don't think it'll take long for you to get a feel of what we're doing. And I think right now, without kind of going into detail too much, but I think so far this market is very interesting to start off with. I'll give you the reasons why, but last year you had to be, and you should always be, a very disciplined trader. But I think this is even more so with the way that we are in a bear market. We're waiting for some guidance, I guess, from the Fed for when they're going to pump the brakes, in terms of not raising rates as much, and it's kind of slowing down, and kind of reading some of the data that's been coming out. We have inflation data that comes out next week. We get a jobs report on Friday. Also, some of the European data that's been coming out, inflation. Yesterday, there was the Germany CPI that came in much less than expected. I think it was it's either negative 0.5 or 0.6. And then today there was the France CPI, which also came in lighter than expected. That was negative 0.1. So, until then, we kind of have our strategy set, in terms of what I'm looking for, and, really using our indicator to identify overhead supply. I'll give you a couple examples of that today. But that's really working quite well. Before I get into anything else here, risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer right here. So for the day, you had SPY up 0.75%. The Qs trailed that a little bit, and again, Market Web's giving us an excellent roadmap. Really nice outperformance for the SPYs, 1.25%. Bonds rallied today. Gold and silver remain gold remains strong. Silver gave back the early gains. VIX actually closed on the lows of the day, and I'll go through sectors in just a bit. But I'm hearing this a lot. When people, and this is kind of, some of the things that we tend to look at is, we look at the market from different angles a bit. So, looking at this and the S&P chart, we'll stick on the daily chart for just a second here. But yeah, this is a sideways range that's been going on. But if you look at some other areas of the market, you can see that there's a little bit of strength building underneath the hood. For instance, remember the S&P is an market cap weighted index, so the biggest names get the largest weights, right? And that's skewing the performance a little bit. How do I know that? Because if you look at the same components, but equally weighted, so same exact names that are in the S&P, the 500 names, but taking them and weighting them differently, you will find that this is actually making some progress here, and just barely, but it is back above the 200-day moving average. In fact, it's above all these moving averages. So to me, that's something. And I would actually rather have the RSP, the equally weighted S&P 500 ETF, outperform, because there's more opportunities than just a handful of stocks. So I actually like that a little bit better. I would like to see a little bit better, upside in more things, but hey, we can't have everything right now, right? So let's go back to the S&P for just a second, because again, I do of course focus on that the most in terms of supply and resistance. But there's a couple of things that we're telling for the day. Right. We did manage to get close to yesterday's highs, but not quite there. I mentioned that if we did get there, that this might act as some resistance for the day. But you could see we're hanging around this top of value. for the week. So that level is 38.74, right? And that's kind of the level to watch for now. Also, of course, if we get down there, 38.29 is something to watch. All right. Now let's go over to the Qs for a minute. All right. So the Qs, let's look at this for a second. Right, and you could see that we are capped, which we talked about yesterday. We've got resistance up here at 26, right around 270, right? And we're in this lower range, and we don't know yet how this is going to resolve. This could be a bear flag, and this could resolve lower. You really can't tell much from the moving averages because we're hanging right around there. If you look at QQEW, right, again, it's a different looking picture. Same components as the Qs, but you equally weight them instead of market cap weight them. And you could see that it's a little bit of a better picture. It's trying to kind of resolve and kind of move out of that consolidation higher. Again, this still has a lot to do in terms of 20-day moving average, 20-day moving average and the 50-day moving average, but you could tell there's a bit of strength here. Let's go back to the Qs and look at the 1 hour chart. So remember what I said with the S&P, it's hanging around the top of value. Notice that again, there is just easy to spot the weakness here, right? And this thing could not get out of the value area today. So 267 is the barrier for now. And that's important to watch. Where there was the strength was in the small caps today. Notice that is clearly above the 1 hour value area. This did get to the previous resistance or resistance, where this the highs for the week and couldn't get through it. All right, and a look here at the daily chart. Above the 5-day moving average right now, but getting capped by the 20-day moving average, right? Price doesn't really want to get above the 20-day moving average. So again, just looks like price is not ready to really make an aggressive move at this point. All right, and next, a couple of things that I wanted to go over. We're going to go over some single stock setups, and we'll go over what's moving in the sectors. But first, bonds. They've had a really nice start to the new year. Remember, like this was a big sticking point. I actually made some nice money on TLT puts last week. Now we're seeing a move back above this line that I keep highlighting here is the 50-day moving average. The main question is 128.06, right? And if you could do some shorting here, I actually put on a small short thinking that this gets rejected in here and maybe you see a turn back down. I also like that trade too, because if I'm playing more equities to the long side, one of the risks is higher yields, especially for growth names. So again, it's not the only risk out there, but it's one of them. So watch this 128.06, or if you like to watch TLT rather than 30-year bond futures, it's 103.56. Again, so far so good. Nice bond rally, but here's where the heavy lifting comes, right at the bottom of value for the month. Okay, so that is coming upon resistance. Again, not to say that it can't overcome it, but right now you've rallied into resistance, and that might be a little bit of a sticking point. All right, so that's a few things that I'm watching. I mean, let's start with the leaders. Well, even the pot stocks were up today. I didn't see that. Clean energy stocks had a good day today too. But the Chinese internet names. This is my must-watch chart to start the year. The Chinese internet names. I mean, look at the move today up. This is followed by a big move yesterday. Again, a lot of about a month of consolidation. After a decent move, which is quite normal, and resolving higher. So what's different about, we were kind of debating this a little bit in the trading room today. What's different about Chinese internet names? Well, in terms of what's the risks, what's the rewards, and I'm not going to cover everything here, but you have political risk, obviously, with the Chinese internet names. They can come in and they could say that a company did something wrong. They could say overall, they could, they could sabotage the whole equity market if they want to. It's just a different type of it's a different political system, right? So that's the risk that you have. And knowing that, if you, for example, look at what happened to TAL a couple of weeks ago, right? This was a high flyer, and the government came in and said something, and the stock went from 10 bucks, basically dropped about 30%. Futu had some irregularities, I believe, too. This stock went from 70 bucks to 41. So it's definitely, has, in my opinion, more risk than US names. They could be very volatile, but, we're looking at something that is kind of starting to do something different. Right. And if you look at this, remember, we got to our high point here on 627. We actually came in, took out the lows, and then rebounded quite nicely, and are kind of back to that level back at 627. But the moving averages look so much different to me. Also, notice we've got a couple more days. This is a developing candle. I'm on the weekly chart. But what we said in last night's webinar was 32.82 is definitely a level to watch. And if we close above there, we are now beginning to trend higher on the weekly chart, above that value area for the year. Again, look at how slim the value area is too. That can mean that there's a big move that's coming. Right. Here was when the value area was also very narrow, and look at what it did here. That was at 45. So again, I'm not saying that that's going to happen, but this value area is a lot narrower than some of these other ones. So 32.82 will be the level to watch. Again, back here, price was not above, and the moving averages looked okay. Now you've got like a crossing over of, I think, what the 20 over the 50 and over this the 200 period moving averages all the way here, but 20 crossing over the 50, right? And these moving averages are now all starting to move higher, except for the 50, not yet. All right. So again, it looks very constructive to me. I think we come up and take out that 36 VPOC. And we can go through a bunch of individual names, but I think it's better to play this group. Day trading is different, by the way, but if you're swing trading, I think playing the ETF, right? A lot of times I see a lot of like technicians on Twitter. They very rarely seem to want to trade the sector ETF or the country ETF. In this case, they'd rather either just trade the individual names or even like something with leverage, right? But really, if you trade either the sector ETF or the country ETF, you are minimizing your stock specific risk, right? And for something like this, it's not like you're missing anything, right? This is up 8.8% for the day, right? So there's enough volatility with that. Okay. So same thing here. We don't have, the moving averages, if going back to here, the 200-day moving average was still sloping down. Notice how this is beginning to kind of turn up again. That's also a pretty good sign. So I like this group. Again, it was my must watch to start the year. I do have a position in the TTG trend portfolio. I've had a position now for I think a little over a month, and then I added to it about 2 weeks ago, I think. All right, sorry, I'm going from memory, but I believe that's the situation. So other than that, another theme that we talked about coming into this year was just the aerospace. There's a lot of strength within this group, and Boeing had a monster day today, up 4%. Ultimately, I think Boeing can get up to 213. But it doesn't mean it's going to get there in a straight line, especially with this market. So it could come back in, it could back test. Before it was moving very methodical. But for now, I'm holding on to, to a piece. By the way, this is what our charts channel looks like during the day. I go over, a lot of different, setups as on the fly. For example, if we see option activity, I'm busy kind of saying, okay, I think that this is a good setup. So we'll go through some of these. Here's my trade in Boeing. I did take some targets in this one. I'm just holding on to the last 15% of the swing trade for now. But yeah, if you go through your and I'm not talking about the airlines, I'm talking about aerospace names. AER is another one, right? Which is now a little bit of and I didn't trade this one because it had the resistance of 59.63 right there. But that's another one. Another one too is this SPR, which we saw a big call block of calls that went up about a week ago. Thinkorswim has taken its time with this one, but you know, not up 9%. So really strong move here, gets it above the 200-day moving average, right? And yeah, and I just think that this is a nice trend right now, right? You know, people are still, you know, if you went anywhere for the holidays, you know that the airports were packed. They have been packed, you know, and that's been the situation. And you know, these you know, these planes are going to need new parts. They're going to need new, you know, airlines are going to need new planes. So I think it's a good place to be, right? If you think that, which is fine, if you think there's going to be a major recession, then maybe that's not the trade for you. But I think the price action within this group, you know, is telling you something. The industrial group too, right? A name that I'm watching for tomorrow is Caterpillar, right? We know that Caterpillar has been super strong, right? It's kind of in consolidation, right? So when I see something like this, again, I use multiple time frame analysis, right? So I've got an alert and I'll kind of wait for 242 to be broken. You know, you could always start a small position too, if you want to, you know, if you want to get in a little bit in case you're worried about gap ups or something like that. But really 242.20 is the level that I've got my alert set. A couple other things that you know, we talked about in the webinar just last night was the casinos, right? Which is also kind of a recipient from what you know, China is doing and Macau. You know, look at what's going on here in this chart, right? So this one, you know, very similar to that Chinese internet ETF that I just showed you, right? Nice move up, digestion for basically all of December. So it kind of puts you to sleep a little bit. It went sideways, and it resolved higher, waited for the moving averages to kind of crunch in here and resolving higher. And this was something that you know, I went over yesterday a couple times in our email. That's another thing that you receive if you are a member. You know, here is our setup yesterday. All right, so this is a definite must watch for me to start the day. But I was detailing where there was previous resistance, you know, the last few weeks, you know, talking about that 1 month range, right? And then look at this thing break out today. So just like with Boeing, you know, I think there's an upside target up here. This is 54.60. Right. And it doesn't have to get to, you know, with this market, it may not get there in a straight line, but ultimately I think that that's in play, the 54.60. The other names were doing very well too. You know, Win, I think, was the one that actually got an upgrade. But Win was a little bit noisier to me, because it had to get through the value area. Now it did it. But I think also this is a strong looking chart as well. MLCO is the third one that's kind of in that group. That was very strong. Again, these are all names that we talked about in last night's webinar. But this did take out a virgin point of control, so I would think that there might be a little bit of digestion. All right, so we're talking about, you know, some of the stronger names in here, you know, and I can mention a couple other areas. I also like Nike, which also has some Chinese exposure. You know, it's a little bit extended. You know, I think, well, those other names are kind of extended too, but I think, you know, similar thing here, digestion and resolving higher. And virgin point of control, overhead supply up here at 180, 128.71. The gold miners, you know, I mentioned gold did very well today. GDX finally kind of got out of the value area. So virgin point of control here, maybe this continues higher. I actually like looking for individual names here. I like Newmont. Gold is another one that's been seeing some call activity. Royal Gold is another one too, even though it didn't close exactly on the highs, but the gold miners look pretty good. And you can see what happened to silver today. It had a fight with the top of value and it couldn't get there. So for now, it looks like gold miners have taken the baton for now. So a little bit more strength. Silver miners, WPM did take out a virgin point of control. Again, you hear me say this virgin point of control a lot. Why is this so important? Well, because a lot of times, you know, names are just rallying. If they don't have the strength, are just rallying either to the top of value and getting rejected, right? This was a name. So this is kind of an interesting chart, because number one, this is a little bit of a sign of weakness here. It got rejected before it made a new high. So you got a lower high in here, and you don't know if this is going to be another lower high. But you know, I was profiling this name, you know, right at the end of the day yesterday, and I said, hey, this will be on my watch list. Well, you know, so in this market, if you're doing some really, you know, faster either day trading or short-term swing trading, you know exactly where to take some of these things off, right? $87 was a virgin point of control overhead supply where, you know, heavy volume occurred in the previous period, but we haven't returned there. So, you know, a lot of names are getting rejected at these virgin point of controls. Again, here was one over here too. Same, you know, same thing. Went up to here, and that's as far as it went, and it went lower. So that's the environment, you know, that we're in right now with the Fed, you know, contracting liquidity and doing and reducing the balance sheet. Just some of these names are just a lot harder to deal with. Splunk was another name, you know, where, you know, rallied right up to the VPOC, and this is not a market to be greedy in. Like if you're trading short term, you know, and you traded this from 86, boom, that's, you know, you got $3-4. Did the same thing back here, right? Went right up to this VPOC, went a little bit higher, up to 94, and backed all the way back down to 82. So, you know, our indicator is telling you exactly where overhead supply resistance is, and then you can, you know, you can go from there in terms of your trade. All right, a few other names that I've got. I think I kind of covered as much as I wanted to for the day. You know, I'll give you one or two other setups. You know, STLD is something that I'm watching. Let's see how this thing closed for the day. I do like the steel names. You know, a lot of times what we're seeing with this market too is things will act pretty good for a couple of weeks, show some leadership, and then kind of fall apart. It's been very difficult for names that were showing leadership to kind of regain that leadership. So I do a lot of monitoring, and I think around 100. You know, of course, you could play this move up to 100 and take it off, but I'm kind of more interested to see if this can, you know, get out of this pattern right now and start to move higher, because I like that name a lot, and I do like the steel group. It's a cheap group. It's not expensive. It is cyclical, but yeah. So that's another name. And then you know, a little bit of healthcare. You know, Bristol Myers, which this is more of a buy the dip one, but you got a virgin. Speaking of virgin point of control, here's one taken out here, right? And here's one also on the 1 hour taken out. So I did take a target here. Sometimes I don't wait for the VPOC to be taken out. Like this was close enough, right? And now if I wanted to, I didn't. But for now, you know, we'll see if it can get back above value. And then I can begin to kind of, I think my last target in this, you know, little trade will be up at 74 or 75 is what I'm looking for. All right, guys. So I've got other names to go over, but I think that's good enough for the first public video of the new year. One little joke that I have for you is, hey, look at how much ARK is outperforming year to date. I know that's going to get people get triggered when you say this, but it's up 1.7% so far to start the year. It's actually over the last 5 days, if this is correct. I have to check my formulas because they're tying in maybe some different prices, but it looks like it's up 6.7% over the last 5 days. Again, I'm not saying anything else because I don't like the way that fund is managed, but I'm just being funny. I know it gets people mad, but I think you got to, you know, making jokes and being light, I think kind of really gets you through some of these days where, you know, probably not every trade that you put on is going the right way. So that's my one joke for the day. Maybe not one, but for the video. Have a great night, everybody. See you tomorrow.